Your comments echo those of Gary Gensler, the new SEC chair, talking about cryptocurrency markets as the Wild West earlier this summer, suggesting more regulation is coming. When you talk about the need for more regulation, who are you looking to protect, and what kind of regulation do you think is needed?
Well, Juliana, first of all, thanks very much for having me. I'd break it into a couple of different buckets. The first piece, which I think echoes a lot of what Gary Gensler is talking about, is a concern about retail customers. What we're talking about here is a group of people that are more and more drawn to crypto markets. They see these outsized returns. They believe this is a great opportunity to make money, but they have no idea how those markets work. They have no idea that many of the protections that exist for them in stock markets and other instruments don't exist in cryptocurrency markets. There's no one to go after afterwards if something is done to them or they're taken advantage of in these markets. And it's these ill-informed consumers that have a very hard time defending themselves. And that's why I think regulators need to do so. The second group actually is the regulators that oversee large financial institutions and large companies around the world. More and more, you're seeing a move for crypto into the more generalized financial system. And as they try to do that, they're looking to find ways to get into mainstream finance without having to play by the same rules that major financial institutions like banks have to play and asset managers have to play, et cetera. So in some ways, it's giving them an unfair advantage, but it's also allowing them to show up to the marketplace and destabilize the way in which financial markets have operated, honestly, in many cases for decades and even centuries, and could have impacts as large scale as monetary policy, interest rates, and others.
You know, it really helpful to break it down into those two buckets there. When you talk about what kind of regulation could come into effect, is it as simple as copy pasting the types of protections that are in place for traditional asset classes like equities, or is it going to require a rethink and a new type, a new set of regulations?
The truth is it's going to be some of each. So in the first example, if you're talking about a digital share of stock, that's something that the current regulations around the world are perfectly suited to taking care of. The digitization of one of these instruments is merely just a different way of reflecting the reality of that instrument in the market. And therefore, if a government agency has the power to regulate a share of stock that isn't digital, it has the same powers to do it digitally. And I think Gary Gensler in the US, Andrew Bailey in the UK, and others, I think they recognize that intuitively. Then you've got the other extreme, which are these crypto markets. You talked about them right in the lead up to the interview about what the prices of Bitcoin and Ether and Dogecoin and others are doing. These are instruments that are totally untied to any underlying asset. They don't reflect any market fundamentals. They exist in a world out there that is not backed by the global financial system. And really, regulators are having a hard time grappling with what to do about those. And I think there's a different set of capabilities needed to look at those instruments. The final are something you'd sit in between something called stable coins, which I know you all talk a lot about on CNBC. These are instruments that are in theory pegged to underlying virtual fiat currencies like the US dollar, the UK pound, et cetera, and are meant to mimic those currencies as well. But the issuers of them are private sector entities that don't necessarily play by the same rules. If you saw years ago, or within the last 18 months, Facebook put out something called Libra, and then Diem and is talking about bringing one of these to the markets. They're looking to issue a stable coin tied to the US dollar that doesn't actually have to play by any of the rules that things like money market funds or other regulated instruments have to. And in that instance, there are certain capabilities that regulators already have, but there are other new ones that would need to be developed.